to Morning Trade Live. It's time to go inside out on Uber ahead of the company's earnings that are due out tomorrow morning. Ben Harwood was with us, analyst of technology infrastructure at New Street Research. Thank you for being with us. So much about Uber, certainly making a nice comeback too, over 1 month, up 31%. What are your expectations for tomorrow morning? Do you feel like it'll be a good report or one that will maybe have some down arrows after it?
Thanks for having me on Nicole. So we expect Uber to really print some healthy numbers. We expect bookings up close to 20% year on year here. There could be some caution on the call, of course. There's the risk of a slowdown given the uncertainty that we have in markets around the world with recessions, etc., relating from the tariffs. Of course, the airport business could face some slowdown as well. That's around 15% of their bookings. We've seen the airline figures that are coming out there as well, which is implying a bit of a slowdown there. And of course, if you look at the food delivery side of the business, you just had DoorDash speaking there, and that side of the business is a bit more discretionary spending than we see from perhaps the ride-sharing business. However, I think that the risk is largely minor, given the fact that the ride-sharing business in particular is largely utility these days, and we continue to see largely a lot of these marketplace companies are managing to navigate the backdrop very well. So that's really in terms of top line, we expect some continued strength, and then in terms of profitability, we'd expect the company to continue to generate excellent unit economics, really reflecting the underlying profitability that you have in ride sharing. And, we'd expect a continued beat and raise on the profitability front as well.
So I saw some deal making, Pony AI Robotaxis to be deployed on Uber platform. That was one thing I read this morning. The other was Uber Technologies acquiring an 85% stake in Trendle Go for $700 million. Are these important pieces of information for Uber right now?
So the latter business is really very minor. $700 million acquisition price, kind of 0.5% of the market cap, and it's acquiring a delivery business in Turkey. It's not going to move the needle too much, especially on the profitability front. However, the Pony AI news, that's really part of a string of news flow relating to robotaxis. Uber's partnered with all of the leading robotaxi companies out there, ranging from Pony AI to Waymo to a whole host of long tail companies that are in this market. And that's really behind a lot of the rally you've seen in the stock, is Uber positioning itself for the next frontier in ride sharing, which is robotaxis. And we think they're going to do very well on that front.
Yeah, I saw they also expanded with WeRide, that partnership to 15 additional cities. The robotaxi picture, how important is it, and how soon? Because it's my understanding, we've got these autonomous vehicles going as taxis in certain places. I don't know if they represent Uber or it's just tests happening. What can we expect in the future, maybe in 12 to 18 months? Am I getting in with no driver?
Yeah, absolutely. You're already starting to see that play out today. You have Los Angeles, you have Austin, you have a lot of geographies in the US. That now today it's very small scale. You're kind of talking 0.5% of ride-sharing rides happen via robotaxi, but that's only going to increase over time. And this is really the big debate on the stock today: is robotaxi an opportunity or is it a threat for Uber? Now we think it kind of fits in both categories. If you look at it as an opportunity, robotaxi allows Uber to lower the cost of a ride from roughly $4 today to $1 or even less going out into the future. And this, of course, allows them to compete with public transport, car ownership, and massively expands their TAM. You can imagine Uber growing very strongly over decades as this starts to play out. But of course, the risk is that it opens up the market to some of these new entrants like Waymo, like Tesla. So far, as I mentioned, the company's been able to navigate that risk very well, partnering with leading robotaxi companies. And the benefit for Uber is it gets access to this technology. The benefit for the robotaxi companies, they get access to Uber's scale, Uber's customer base. It can scale the technology without having to invest massively in terms of ramping this technology. However, the big unknown and big risk today is Tesla. And we know how Elon likes to approach things. He'll go with a Tesla first approach. And we see Tesla as one that could potentially scale without Uber. So they're launching in Austin in a couple of months, and we need to see how the reception of that product is. But largely an opportunity with a bit of a threat there, right, is how I'd frame that opportunity.
Yeah, understood. The high was last October of $87. I mean, we're around $84.50 right now, not too far off the high that we had seen. Does it seem likely that we'll break through that?
Yeah, so I think that really depends on what news flow happens over the next 2 to 3 months, really, because what caused the decline in the stock is you had more companies announcing they were ramping robotaxis, and then, of course, as Uber's managed to drive partnerships with them, that drove a recovery in the stock. Now, if you see Tesla come out and be incredibly successful, that will no doubt be a headwind to the stock. But if Uber continued to ramp its technology with Waymo, with Pony, with WeRide, while Tesla stalls a bit, I think that would definitely help the Uber stock and the Uber story.
Yeah, I also want to add for all the mothers, Uber is making 1-800-Flowers gifts available on Uber Eats if you want to send flowers to your mother. All right, Ben Harwood, New Street Research. It's great to see you. Thank you so much. So we'll continue to follow Uber. I was just looking to see if I could find some recent price targets here, because the high was 87. We have Tom White here, host of Fast Market, to take a look. You actually have some example trades for us for Uber. Some of your thoughts on example trades.
Yeah, Nicole, the option market's priced in a relatively muted kind of 7% move either way, just over $6. So implied volatility levels on that rally that we saw, before today's session of about 9 days in a row kind of took a little bit of wind out of the sails as far as implied volatility levels in this name. So with that in mind, I looked at a strategy a couple different ways here in Uber. The first one I'm going to look at is a little bit more bullish, but not as aggressive as maybe just buying straight calls. I'm looking at buying an unbalanced or broken wing call butterfly to the upside if you think the stock's going higher. Went out to the May 9th weekly options that expire in just 3 days. We're going to buy one of the 84 strike calls, sell 2 of the 90 strike calls, and then buy one of the 92 strike calls. So you can see it's unbalanced there. You're buying basically a $6 wide bullish call vertical, offsetting some of the costs by selling about a $2 wide call vertical. Paying roughly about a $2 debit for that. So that means your risk is about $200 per spread. Whatever you pay on this type of strategy is going to be your risk. It takes your break even up to $86. That's less than 2% above the current share price. So you don't need a big, giant move to the upside, but you do need some movement to higher in the stock post earnings. Now, the apex of profitability is going to be new, fresh all-time highs if we get there, and that's right at or near the 90 strike where you sold 2 options in this strategy. But even if it continues to move higher, goes above 92, it's still going to be more than a double in value as far as profitability goes. So this might be the way to look at it. Low cost entry point as opposed to buying just a straight call or just the call vertical. The unbalanced call butterfly here to the upside if you think the stock's going higher.
All right, and then at the same time, that was your bullish example trade. You also have one for the bears out there, a bear example trade.
Yeah, and this one takes advantage of that dispersion between implied volatility levels on this type of strategy. We're looking at a bearish put diagonal to the downside, really short-term positioning. We're going to go out to the May 16th monthly options that expire in 10 days. We're going to buy the 85 strike put, just slightly in the money. And then against it, in the near-term May 9th weekly options, we're going to sell the 79 strike put. So that sets up with that one standard deviation move to the downside of about $6 either way. For this $6 wide put diagonal, you're paying roughly about a $270 debit. That's going to be your risk, $270 per spread. But you can see here from the risk profile, anything below about 83 is going to be potential profitability on this type of position. And you're paying less than half of the width of this $6 wide bearish put diagonal. And why is that? Well, it's that vol dispersion I mentioned, where you're buying about a 66% implied volatility on aggregate in that May 16th 85 strike put, and then selling about 103% implied volatility on aggregate in that May 9th weekly options on the 79 strike put. So that vol dispersion where implied volatility levels are really elevated going into that report in the near-term options that you're selling as opposed to what you're buying on this one. As I mentioned, the risk is 270 to the downside, but you definitely need a little bit of a move to the downside to profit on this one.
All right, Tom White, thank you so much. Always great to see you, and we're going to watch Uber very closely. And we got a nice thoughts from Ben Harwood and some example trades from Tom White. We appreciate it. Thank you.